Imagine waking up tomorrow and the world's most powerful currency suddenly losing trust. Stock markets panic, oil prices swing, and global trade slows in hours. This is not fiction. This is the real power of the US dollar in today's global economy. Most people think exchange rates only matter when they travel abroad, but the truth is far deeper and far more powerful. The dollar quietly shapes the economy of almost every country on earth. From fuel prices to interest rates, from inflation to job markets, it all connects. Even if you never hold a single dollar, it still affects your daily life. Before we go deeper, make sure you like and subscribe to Money Finance Insights. Because on this channel, we break down global finance in the simplest way possible. And if you want to truly understand money, this topic is essential. Now here is the shocking truth. The dollar is not just America's currency. It is the world's financial backbone. Around 60% of global reserves are held in dollars today. Most global trade is priced and settled in dollars, and major commodities like oil are mostly traded in dollars. This gives the United States a unique financial advantage, an advantage no other country currently has. But how did this happen? How did one currency become the center of the global economy? To understand this, we must go back to the end of World War II. The world economy was shattered and unstable at that time. Countries needed a stable system to rebuild global trade. That is when the Bretton Woods Agreement was created. It was led by the United States and major allied nations. The system made the dollar the anchor of global finance. Under that system, the dollar was linked to gold, and other currencies were linked to the dollar. This created trust, and trust is the foundation of any currency system. Institutions like the International Monetary Fund and the World Bank were also formed. These institutions strengthened the global financial structure. Later, even when the gold link ended in 1971, the dollar stayed dominant, because by then, the world was already deeply dependent on it. Another major factor was oil. Oil exporting countries started pricing oil in dollars. This system is often called the petrodollar system. So if a country wants to import oil, it usually needs dollars. And every modern economy depends on energy imports. This creates constant global demand for the dollar, and that demand reinforces its dominance. Now let's understand how this dominance shapes every country's economy, because this is where things become very interesting. First, let's talk about trade. Most international trade transactions are done in dollars, even if the US is not part of the trade deal. For example, if Japan trades with Brazil, the deal may still use dollars. That means both countries must hold dollar reserves. This gives the dollar a global transactional monopoly, and that power influences exchange rates worldwide. When the dollar becomes stronger, other currencies often weaken, and that directly affects import and export costs. If a country's currency weakens against the dollar, imports become expensive. That includes fuel, technology, and raw materials. This leads to inflation inside that country, even if the local economy is stable. Now think about developing countries. Many of them borrow money in dollars. This creates a hidden financial risk, because debt repayments must be made in dollars. If the dollar strengthens, their debt becomes more expensive overnight. This can create financial crises very quickly. We have seen this pattern multiple times in history, from Latin America to Asia to emerging markets. Dollar strength often triggers capital outflows from weaker economies. Investors move money towards safer dollar assets. That means less investment in developing nations and slower economic growth for those regions. Now let's discuss interest rates. The policies of the Federal Reserve affect the entire world, even countries that are not part of the United States. When the Federal Reserve raises interest rates, global liquidity tightens. Borrowing becomes more expensive worldwide. Foreign investors shift funds toward US bonds and assets. Because higher yields look more attractive and safer, this strengthens the dollar further and puts pressure on weaker currencies. As a result, central banks in other countries are forced to react. They may raise their own interest rates to protect their currency. But higher interest rates slow economic growth and can reduce business expansion and job creation. So one decision in Washington can impact economies globally. That is the real scale of dollar dominance. Now let's talk about inflation. When the dollar strengthens, global commodities often get cheaper, but only for countries holding strong currencies. For weaker economies, the opposite happens. They face imported inflation due to currency depreciation. Fuel becomes expensive, food imports become expensive, industrial inputs become expensive. This increases the cost of living for millions of people, even if their local government did nothing wrong. Now consider global financial markets. Most global bonds are issued in dollars, and many multinational corporations borrow in dollars. This creates a global dollar-based financial system, one that is deeply interconnected and fragile. If dollar liquidity dries up, markets can freeze. We saw similar stress during the 2008 financial crisis. During that time, global banks needed dollar liquidity urgently, and the US central bank provided swap lines to stabilize markets. That shows how central the dollar is to global stability. Another major influence is foreign reserves. Countries hold large reserves to protect their economies, and most of those reserves are stored in dollars. Why? Because the dollar is considered the safest reserve currency. U.S. Treasury bonds are seen as highly reliable assets, and global institutions trust their stability. This creates a cycle of confidence. More trust leads to more demand. More demand strengthens dominance. Now let's talk about geopolitical power. Dollar dominance also creates strategic influence because global financial systems rely on dollar clearing networks, and major transactions pass through U.S. regulated systems. This gives the U.S. the ability to impose financial sanctions and restrict access to global payment systems. Systems like SWIFT play a major role in global transactions. And dollar access is critical for international banking. When a country loses dollar access, its trade becomes extremely difficult, and its economy can suffer major disruptions. Now, here is something most people don't realize. Dollar dominance also allows the U.S. to run higher deficits because global demand for dollars remains strong, and investors continue buying U.S. government debt. This is often called the exorbitant privilege of the dollar. It means the U.S. can borrow more cheaply than most countries. Meanwhile, emerging economies face higher borrowing costs, even if their growth potential is strong. Now let's discuss currency crises. Many currency crises in history are linked to dollar movements. When the dollar surges, global debt pressure increases, and capital flows return to the United States. This creates liquidity shortages in smaller economies and weakens their financial stability. Countries may be forced to devalue their currency or use reserves to defend exchange rates. Both options come with serious economic consequences. Now, let's explore how dollar dominance affects everyday citizens, not just governments and central banks. If the dollar rises, imported goods become more expensive globally. That includes smartphones, electronics, and fuel. This reduces purchasing power for consumers worldwide and increases cost of living pressures. Businesses also face higher input costs, which may lead to layoffs or reduced hiring, so the dollar indirectly affects global employment trends. Now consider global investments. Many international funds are dollar denominated, and global investors benchmark returns in dollars. This shapes asset allocation decisions worldwide and influences stock market flows across continents. Even crypto markets react to dollar strength, because global liquidity often moves with dollar cycles. Now the big question, will the dollar always stay dominant? Some analysts believe the system may slowly change, especially with the rise of new economic powers. Countries are exploring alternatives to dollar trade, including local currency agreements and digital payment systems. Some trade deals are now settled in regional currencies, but the scale is still small compared to dollar usage. The euro and the Chinese yuan are often mentioned as challengers, but they still lack the global trust and liquidity of the dollar. Trust takes decades to build in financial systems, and the dollar has a massive historical advantage. Another factor is financial market depth. The U.S. has the largest and most liquid capital markets. This attracts global investors continuously. Transparency and legal stability also support dollar trust, which strengthens its reserve currency status. Now let's consider the digital future. Central bank digital currencies are being developed worldwide. Some believe they could reshape global finance, but replacing the dollar system is not simple, because global finance runs on deep institutional trust. And that trust is built over generations, not years. Even during global crises, investors rush toward the dollar, not away from it. This behavior reinforces its safe haven status and further strengthens global dependence. However, rising debt levels and geopolitical tensions could influence the future, and global economic shifts may slowly diversify reserve holdings. Still, a sudden replacement of the dollar is unlikely, because the global system is deeply dollar-centric. Now think about this from a strategic perspective. Every country must manage its economy while watching the dollar. Central banks monitor dollar strength daily, finance ministries track global liquidity cycles, and policymakers adjust strategies based on U.S. economic signals. This shows how one currency can shape global policy decisions. On a scale few people truly understand. If you've made it this far, you're already ahead of most viewers, because very few people understand how global money actually works. And this knowledge changes how you see inflation, markets, and geopolitics. Now imagine a world where the dollar suddenly weakens significantly. Global trade systems would face major adjustments. Commodity pricing models would shift. Reserve strategies would evolve, and global financial flows would rebalance. But until that transition happens, dollar dominance remains the core pillar. So the next time you hear about the dollar rising or falling, remember it is not just a currency story. It is a global economic story. It affects nations, markets, businesses, and everyday lives. Before we wrap up, I want to hear your opinion. Do you think the dollar will remain dominant for the next 50 years, or will another currency eventually challenge its position? Drop your thoughts in the comments below, because your perspective matters in this global discussion. Also, share this video with anyone interested in finance and economics, because understanding money is the first step toward financial awareness. Once again, subscribe to Money Finance Insights, so you never miss deep but simple global finance breakdowns like this. At the end of the day, the story of the dollar is not just about America. It is about power, trust, and global economic interconnection. It is about how invisible financial systems shape visible realities, from grocery prices to interest rates to global stability. The dollar is more than paper or digital numbers. It is a symbol of financial influence and global trust, and whether we notice it or not, its dominance quietly shapes the economic destiny of the world. Stay informed, stay aware, and stay financially curious. Because the more you understand money, the more control you gain over your future.